Got one right over there. There we go. YouTube is rolling. Ooh. Very good. Ralph, how are you? Brandon, good morning. We will be getting started in just 1 minute. Hey, Robert. Murmis, just talking to you. Actually, let me do it right now. Oh, maybe not. Murmis, I'll give you a call later. Hey, Patrick. Ray is on YouTube. Jody, Kimberly, Ed. No infinitely today. More Fed speak right now
Oh,
from Fed's Cook.
someone speaking right now?
Comments by Fed's Cook are out, and
Oh, all
he
right.
said, "Shocker." In Fed speak, he said, "Higher for longer until we see otherwise."
Yep, yep. That sounds about right. It's kind of like what I was expecting. Nothing really weird. The only strange thing is how the bond market is coming down. The only thing that's surprising is how the bond market is reacting. Nothing else here is being surprised. Hey, Randy. Hey, Brendan. Hey, Jack. Hey, Robert. Owner, yes, you should have those arrows on your dashboard too. If you're like right now, for example, here I'll share my screen. Share my screen. Like for example, I'm just looking at the Dow. See the arrows popping up? You should have that. See arrows popping up. Today's a really weird day, I'll tell you. Today's a day where you're seeing this is one for the books, really. And I mentioned this on my broadcast. You're seeing a breakout on the QQQ and you're seeing a breakdown on the Dow. But you're not just seeing it weak and strong. You're literally seeing a breakdown and a breakout. I mean, that I'm I'm used to looking at the market and analyzing the market by using the market. And the market's like it's like one of your arms is doing this and one of your arms is doing this. It makes it infinitely more difficult to trade. Oh, you took the Lilly trade, Karen, huh? By the way, we got out of that trade you gave us. It was all your fault, Karen. The RCL trade. We made money on it, so worked out well. But you got us into that trade, and I got you out of that trade. You took that Lily trade, huh? It was just an idea. I haven't pressed the trigger yet. Ray says, good morning. Made 90% on the Dow put this morning. Thanks, Roger. You're welcome. Matt will post that and he'll repost Karen's and good morning. Oh, you got 185 on RCL. Nice.
Yep.
Grab that. Who can help me with the Arrows owner? His name, his initials is CW. Do you know who I'm talking about? CW. You're welcome, Steve. That's right. Cam White, Customer Service Live. Look at that. Steve got 260% on SCDG. Good, good. Any of you guys take uh the trades from this morning that I gave you, the on from the hit list, like EAT or Builder? Any of those any of those? Huh, Art did. Not sure, Gaston. And grab the one from Art too, Matt. Took Builder and Google. Look at you. I can't listen. Do you have a contact number or email? I don't have a contact number or email for him. If you owner, send me an email and I'll have him reach out to you, or Matt will reach out to you. Somebody will reach out to you. Still in Builder. Good, 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 good. I'm glad it's all working out. We'll be starting in 1 minute. So, as I showed you, the Dow is, and the Nasdaq is, and what does the S&P do? Nothing. Low probability trading, just very, very low, very, very low. Honestly, even if we had low probability trading environment, but we had both the Dow and the Nasdaq moving in one direction, it would be so much easier for me to find a trade. But it's very, very difficult. Rochelle, what are you giving me your email for? I don't know what you're. I was talking to. I was talking to about the arrows to owner. I don't even know what your problem is. Send to Cam. Send me an email and I'll send you to Cam. I'm in the middle of doing a class for over 211 people. I don't know why there's not 300 in here, but usually we'll get to about 300. Send me an email. So again, very low probability trading environment right now. Very low probability trading environment right now. Not a time to jump in. Not a time to be a hero. Not a time to show the market that you're a smart one here. This is not the time for that. Not the time for that at all. Okay. This is a time to sit back and wait for opportunities to come to you. And if opportunities don't come to you, you don't do anything. Good, RV Hannings. Good. Both Builder and Google positive so far. Well, I'm glad to. So real quickly, because we talk about this in the morning. I'm just going to kind of quickly go through them here, especially right now with this divergence we're seeing. It's nuts. I'm doing this in bar chart because I have my levels written out there. No other reason at all. And I'll show you the equal weighted one. So you could see kind of not much to talk about today. We're literally at this level right now. Looks like we want to come up. If we can come up and really rally, we can go all the way to 548 on the SPY, but we're not there yet, and we're nowhere near there. Okay. On the Dow, and Matt, why don't you post the event that I have with T-Buzz?
Yep.
At 1? Thank you, sir. Right here's that level, or a little higher. There we go. On the Dow, that level is 39,000. As I mentioned, we're going to be between 39,400 and 39,000. Keep an eye on this level. I don't think we're going to break. I actually think we're going to bounce off this level because we're in a, remember the 6 different phases of the market cycle: choppy, breakout, pullback, breakdown, pullback, breakout, breakout. Remember that in the full-time trader class, which you guys thought was brilliant? That segment you guys thought was brilliant. I saved the best for last, remember? So, always save the best for last. Okay, so here is the range. Here is the range that we are in. Um, QQQ. It was a good class. Thank you, Steve. Thank you. I appreciate it. It was a great class. QQQ, we're moving up, but again, I'm not seeing much follow through. So I wouldn't be surprised. I really would not be surprised if we got stuck around here and started coming down. Again, it's very, very difficult for me to trade a market that looks like this. Maybe for you it's easy. For me, it's very difficult. When the Dow is down 300 points and the Nasdaq is up 200 points and the S&P is up in the middle, it's very hard because I don't know what's going to pull what up or down. Usually you don't have that. Now we've been doing okay under those conditions, but it's been really fragmenting the hell out of this market. And when you see the Dow literally down over 300 points and the Nasdaq up 200 points, it's very, very easy for one to take over the other and to kind of you've seen that. I know you've seen that many times. I've pointed it out to you how we'll start off with one being down 100 and the other one being up 100 by the end of the day. One is up 150, 200, and one is down 3. You've seen that. You've seen that. So it doesn't make life easier. And you got to think of it like this. You have Kathy says, what class are you talking about that was brilliant? The full-time trader class. It was I did it for like $300-400. I did a 5-hour class. Folks were very, very happy. Claire, not just volume, it's more than volume. Only a few times in 30 years. Yeah, it doesn't happen very much like this at all. At all. It doesn't happen that much at all. Um, so so we would need to see volume, but we would also need to see markets. Let me explain to you why this is very difficult for me to look at and why this is not it's not easy for these conditions to come to fruition. You see, the S&P 500 has a bunch of Dow stocks and a bunch of Nasdaq stocks. If you take an ETF, a Nasdaq ETF, an S&P ETF, that ETF has to be arbitraged. It has to be even with the futures. These are futures that we're looking at. See, what if I was crafty and I took the futures, the NQU24, and I compared it with the QQQ, which trades the same thing in cash? I can arbitrage. If one is out of whack, I can arbitrage. John says an advanced decline line is negative downtrend all day. Yeah. I don't really use it much, but yes. Uh, what's what when different indicators diverge, which do you follow? That's the problem. Which do you follow? And I remember I'm big on price action. And if price action is diverging, it's like asking somebody which way do you go, and one guy is saying to the left and one guy is saying to the right, and you trust both of these guys. Makes it hard. So not just for me, trust me, I'm not the only one. If and by the way, one of the reasons volume is so low, you see, cause and effect. I want to make sure you guys understand the difference in cause and effect. One of the things you got to understand, this is not happening because volume is so low. Volume is so low because this is happening. Do you understand the big difference there? Professional traders aren't trading right now, which is why you have this divergence, because retails don't arbitrage ETFs against each other. So you have that things are just a little out of whack. It's like, let me give you a great example. It's like you're a parent and you go out of town and you have 15-year-olds, okay? You have 15-year-olds, hormonal 15-year-olds. And then you have an older brother or sister who's like 25, okay? And you're like, "Hey, you got to take care of these two youngsters and make sure they don't cause trouble." And and basically the parents are out of town. And the 25-year-old, well, he's 25-year-old and and he doesn't know exactly he's a kid himself still, right? We all thought we were really old when we were 25, but then when we hit 50 we realized we were children. So the 25-year-olds, like, kind of just don't cause too much trouble. So the kids are trying everything they can to go crazy, and they're succeeding on about 50% level, but there's still somewhat of a supervisor in the house. Hopefully that makes sense to what we're seeing right now and kind of where the market is. So
You
it's
talking about me?
huh?
Talking about me?
I didn't say anything about you.
Oh, you said 25-year-old. That's me.
I didn't mention you in my
I'm 25.
yeah. Yeah.
Gotcha.
So what I was saying was if you were babysitting 15-year-olds and if I was babysitting 15-year-olds,
Oh
we
yeah.
would probably have different standards
Different
for
story. Yep.
exactly. So that's kind of what's happening. Mom and dad are out of town and there's nobody watching these things. I was 12 and brother was 6, left alone all weekend. God bless, Rochelle. They would put your parents in prison these days for doing that. That's like child neglect. Back then, you could do
Yeah.
that all
Different
day long.
times.
What'd you say?
Way different times.
Oh yeah, my parents used to leave me alone at 12 years old too. Younger than that too. I think after like 11, I didn't really want to go anywhere with my parents. Uh, I'd love to have known at 25 what Matt does. Rochelle says, I wish they had. Rochelle, you're a character. You got to come out here sometimes and hang out with us. That would be fun. I mean, New York is only what, an hour, 90 minutes away. Anyways, I'll be there. I'll be there. By the way, I will not. VIP room will be closed tomorrow, Thursday, and Friday. Tomorrow morning, I'm doing the last uh morning pre morning must watch. That'll happen tomorrow morning, and then I'm taking a flight to New York, and then I'm not going to be doing anything market related. I'll be still following the swing trades, but I won't be day trading anything or anything like that. Um, so again, you guys understand this market is just whacked right now. It's really, really whacked. And I'm not trading right now a lot because I just don't know what the hell's going on. Thank you, Lisa. And one thing about me is one thing about me, I'm not gonna trade just to make the five people in the who feel like they need that excitement. I'm not gonna do that. I'll only pick trades that are really good trades. If they're not good trades, then I'm just not gonna do it. And right now, I'm telling you right now, the markets are there's no edge right now. There's very, very little edge. Right now, honestly, the best type of trades are income trades, premium trades, where we're just trying to kind of figure out, I will, Rochelle, where we kind of have to figure out where things are not going to go, kind of staying out of their way. But in terms of seeing a big trend right now, just not seeing it, not seeing it at all. All right, let's talk about stocks. And let me tell you, they were not easy to procure today. Uh, things were not easy to procure today. I'm glad I fixed my 100-day moving average. That's good. Now we may have some swing trades or scalping. Yeah, scalping or income. But the problem with scalping is I need to have directional bias, and I have none right now. And it's just making it really hard for me. Really, really hard for me. And again, if something is hard, I'm going to tell you. I'm going to tell you. I'm not going to just tell, oh, yes, I'm Roger. I could do anything. No, no, I'm a human being. And when the cards don't look good, you don't play them. That's just how it works. Also, this time of year is a little winky. All right, first stocks. Do you plan to do swing trades for the pit if there's yeah, I do, Gaston. If there's something good, I will. Or if I get stuck one way or the other. There's two scenarios. So if I see something good, I will. But again, I have to see something really, really good. And look, Gaston. Let me show you something. Look, look at the number of stocks making 90-day breakouts right now. 58 stocks. Look at the number of stocks making 90-day breakdowns. 98. Not much there. Not much there. If you have less than 100 stocks breaking out, the market to the upside's dead, and less than 100 to the downside. I mean, there's some things to the downside, but just not, we're not seeing that forceful, we're just not seeing that forceful, that type, we're just not seeing that. Not seeing that at all. Yeah. And again, we got to play we got to play the game we're given. Can't choose the game. Yeah, liquidity right now is just not fantastic. Okay, let's start with the short side. Dow, basic materials, Dow chemicals, clean 200 break right here. Stop loss right above, probably right here, about 54.75, maybe even a little higher, 54.95. I have not seen IONS. I have not, Jim. I'll take a look later. I have not looked at it. All right. We're going to go 24 days out. DOW, July 19th expiration, 75 delta. We're looking at the 55 put. Talked about the stock several times, and I mean several times. We would use the 200-day moving average as our stop loss level. And don't forget, guys, we're going to have a class with T-Buzz in 42 minutes. First time I've done a class with him in a long time. Thank you for that. I appreciate it. Thank you, Ricardo. I'm only going to be out till Sunday. I'll be back Monday. Leaving tomorrow, flying out Sunday morning. I didn't go last year. I skipped it last year. My family went without me. I had really severe nerve pain, which I don't have now, thank God. 68 Delta, 61 put right here. July 19th expiration. I was miserable a year ago. Miserable. Happened, I think, right end of July, early August, but I was miserable. I was just in pain. And then every time I would touch this or hurt this, oh, it was like somebody was lighting me up on fire. End phase, 200-day moving average as your stop. Yeah, I was in pain. It was just really awful. Wasn't a good time for me. Yeah, that was my back shoulder, like the whole back left backside problem. And the new mattress is not causing me any pain, which is fantastic. End phase, we're going to do a spread 52 delta 105 put. And it was pinched nerves. It was pinched nerves. I took steroids for a little while for like 3 weeks. I did. And I had physical therapy next door to us right here. That was really good. We have physical therapy. It was changing how I sleep. I stopped sleeping on my stomach. That was the big problem for me. So 105 put we buy and the 100 put we sell July 19th ENPH. I talked about it. You should watch the replay, Wayne. I talked about it at length. It's on the replay. If I have time, I'll talk about it. Play. Ah, that sucks, Rebecca. 45 would be my stop. 24 days to go. 69 delta, 42 put right here. Yeah, I've never I tried it once. I don't know, that acupuncture. I'm not a big needle guy. AZEK. Nice, Dale. Grab that from Dale, Matt. A nice breakdown right here. And look how it's sticking to the bottom. Beautiful, beautiful. Intraday looks better than the daily. The stop would be right here about 45. Yeah, John, the problem is we have GDP later this week. And that's the problem. It does seem like a no-brainer to do a TLT spread, but the brainer in there is we have GDP and we have low volume right now. Not a recipe, not a time to do spreads on global on things like TLT when you have something like that. Right here, 45 puts, AZEK, July 19th, 45 puts. Yeah. Remember, we want context is king. Chiropractor. I tried a chiropractor. That helped. X finally breaking down, Matt. Remember how strong this was? X,
Yeah.
US Steel finally breaking down. I would use the 50-day right here as a stop, which is 37.57. I just right click and I put option chain and that's it. That's all. That's it, Josie. Yeah, that's TC 2000. It's very cool. It makes my life easier. X put 24 days till expiration, 67 delta right here, 36 put right there. Hey Matt, when are earnings on SEDG?
August 6th.
Okay, thanks. Yeah, this was designed by traders for traders. Beverly, so far we haven't seen a declining job market. That was on the private report. On the public report, the job market was actually really, really solid last Friday. 2 Fridays ago, excuse me. But I agree with you. I agree with you. If the job market was, I agree with you. The problem is it hasn't. It hasn't. So right here, 37 and 24 days out. Right here, 36 put. FBIN. 50-day moving average as a stop. About 72 as a stop. We would be looking too spready. Maybe right here, maybe the 65 put, but you're going to have to work this order. This is a nice smooth one. And look how it looks. Look intraday and look daily. I love those. Love, love, love those. Right here, 29.62. Right here, 29 put. Right there. This is the home construction index. This is actually an ETF, but look at how home builders are breaking down. Typically, home builders break down when there's no good news with interest rates. Just saying. If there was an announcement right now that interest rates were going to go lower, home builders with home construction would spike up like crazy. Beverly, we were just talking about that too. So this is not indicative. This is actually indicative that interest rates are going to go higher and stay higher for longer because home construction is down. One second, I need to set an alert on something. All right. I would be willing to take this trade SCDG to the short side if it goes back to the VWAP today, which is at 27.66. Don't think it's going to happen, but we'll see. I was just setting an alert there. Yeah, 27.67. Anyways, let's continue. I'm doing like a million things at the same time as usual. Dollar Tree, not great. Not great. Talked about this at least 30 times on this show. Right here, all over the place today, Terry. All over the place. Irritating the living heck out of me. The stop here with Dollar Tree would be 110.50. We would go to a delta of 72, 110 put right here. Thank you, Sean. X-ray. Look at that. Look at that clean, clean downtrend. What not to like? Stop loss around 26, 26.40. go to this 30 put right here. July 19th expiration. All right, let's go to the long side. I like XLC. Told you guys about that yesterday. I really do like XLC right now. I like Google. I like Meta. I like these stocks. I like Amazon. I don't think Amazon's in there, but I like XLC. And I like this pattern right here. Also like healthcare. Prefer to see a little more upside, but I generally like the sector and I like what I've been seeing in there. They're not related and they don't go together, but nothing's been going together these days. So I'm not going to make a big deal about that. As far as individual stocks, there's a couple. Pins looks pretty good. About 42.60 would be my stop. We would be going about 24 days out to about 0.70 delta right here. 43 call. Edward says, are these trades to liquidate today? No, no, Edward. None of these trades are to liquidate today. Brothers, nice uptrend, hitting the 8-day, not too deviated. Stop loss 37.52-ish area. 24 days to go. 77 delta, 37.50 call. Lily, I really like Lily. There may be some action on Lily, actually. Yeah. There you go, Cyrus. That's the spirit. Yeah, I like Lily. Stop would be right at the 15-day EMA, about 860, 868. 24 days to go, 75 delta. Ooh, too spready. Let's do a spread. Let's do the 900 call versus the 910 call. $5 right there, $5. And look at the Dow Jones as we talk. Breakdown. Crazy market. Really a crazy market. Sorry, I'm just looking at a couple of things. WMB, a little extended, especially in this market. I'd prefer to get it closer to the 42.15 area, but a lot of things I prefer. Right here, 67 delta, 42 call, 24 days till expiration. Yeah, volume on SPY right now is 10 million. We're halfway done with the day. We're at 10 million. Show you the average volume has been 50. I mean, it's been, look how low, how volume's been just falling off. Continue. RNA. Nice little turn right here. Stop loss right below this pivot at 36.50. Uh, Spreads are just a little wide, but you could do the 70, 36 call right here. July 19th RNA expiration. To tell this one here, again, a little too far up from the EMA. I prefer to be a little closer, but I'll give it to you anyway. 39.20 would be my stop, 24 days out. 89 delta, 40 call right here. Right there. And last but not least, Amgen. Be careful. It's turning around today after making a swing high, but it could come back. Uh, it's not a day trade, so I'm not really concerned with this. More of a swing. And I like Amgen. I'd be looking at 305.80 as a stop. I'd be looking at 24 days out. I'd be looking at a delta of, oh, I guess we could spread this one. Be looking at 0.50 delta, 320 call versus 325 call. We could do this. 320 versus 325. You got about $2.50 there. Matt, that is all I have for today. Can you post that link again? Because T-Buzz and I are here gearing up to go wild and crazy. Look at the S&P 500 below the VWAP. Not a great day to be a stock picker today. I'm telling you right now. Not a day for adventure. Oh! I forgot to explain. FedEx. Okay, if you're into weekly cash flow, real quick. So FedEx is coming out with earnings after the market closed. We have an option spread. If you look at this is the daily. Look at the daily, how it's hitting the resistance level. I looked at the implied volatility on the earnings, and the implied volatility is about $16. $16 out of 255 is about it's about 7%. So the move is not all that big. Yes, that you just tell them you want the full-time traders class, Eddie. Full-time trader class. They had it either for 400 or 300, something like that. It was like a couple of weeks ago we did it. It was really worth it's whatever you pay for it, I promise you it's worth every cent. As Brendan just said, it's well worth it. Folks, if you benefited from that class, let the folks here know. I was going to do it for $5,000 and only invite like 30 people, 40, but instead I decided to do it for $300 or $400 and invite 300 people. And it was good. So FedEx. So implied volatility is only like $16. So I'm not expecting the earnings to be huge. Plus the spread is hedged, and we have till July 12th. So I'm going to leave it alone. So I just wanted to explain to you basically the same thing that I said this morning. So far, it's moving our way. What I'm hoping for is it'll continue moving down, and we'll get some nice premium from our position. Okay. And again, the reason why I'm going to leave it alone is because the implied volatility expectation for the option premium is not that high. It's like 6-7%. And we're not even at the end of the day yet. And number two, it's because the position is hedged and we have like, it's not like 10 times risk. It's like 1-to-1 or something like that. It's nothing crazy. All right. I'll talk to you later. Matt, take over. Make sure you show them the link again. And T-Buzz and I will be there in 24 minutes. Don't go anywhere. It's going to be a lot of fun. Watching T-Buzz and I together is a lot of fun. I'll see you guys later. Matt, show them the seasonality. Show them the ways of the Jedi Master.
I will do so. Screen 2. All right.
Richard, that's because NVIDIA is driving the SMH bus. That's why they look identical. Go ahead.
Here is seasonality to the long side. Here's what we have right here. Let me expand this out. There we go. I'm going to highlight it again. Okay. We're looking a lot better on the long side. We've got, well, kind of take your pick. Most everything looks strong. The only thing that doesn't look good is basic materials and industrials. That makes sense. They somewhat together. And the reason they don't look good, the accuracy may be okay, is these profit factors are bad. I'm even willing to accept energy with less accuracy and more profit factor. Not great, but profit factor to a point is more important. But you really can't have one without the other. Short side, profit factors are all low. Accuracy is low as well. So we're definitely moving bullish, which is good. We've been terribly short lately, seasonality wise. 10-day hold. Right here, here's your sectors. Profit factors are a little bit weak. Consumer staples look pretty good. Tech looks okay. And utilities. Everything else needs a little more time in the oven. 1.4, 1.45. They're close, but like this zero point 0.8 on industrials, 1.07 on energy. I'm sorry, 1.07 on financials, 0.59 on energies. None of that's good. We need that means you're not making money or barely making money. It's under one, you lost money, even if you had good accuracy. What does Roger mean with 320 versus 325? Oh, you're answering? Yeah, strike prices. It would be a spread, I believe. All right, here's your top stocks, not sectors. The number for momentum is 288, so it's about the same as yesterday. About half the S&P moving up, historically speaking. Oh, sorry, I'm jumping this all around. It's only me doing it half the time. Here is the short side. It's very short, only 66 stocks with short seasonality. And I do see some industrials, some energy, a few financials. There's a basic material. Base materials not showing up as much as I thought it would. Maybe they're kind of down here because that sector was pretty weak. But overall, a lot of industrials. You got PH. Just going to look at a few of these. Oh, no. There we go. Okay. All right. Where were our really strong shorts? PH. Thinkorswim's lagging a bit. Maybe, but it looks a little consolidative. See if EMR looks any better. That one looks like a great short. Tried to poke its head up above the 100-day moving average, and I believe that's the 50. Nope, that's the 8-day. And it's actually crossing the 50 and the 100 today. So 200 days all the way down here. I would look for a profit target of 105, and then you could kind of hang around and see what it does. But that doesn't look bad. So, CC, if you've ever heard of Stock Trader's Almanac, it's literally just historical price data by the date. So what this is measuring is on the long side, it's buying at the close of today's date and getting out when the close takes out the previous day's high, or in 10 days, if that doesn't happen, it's just getting out with like a max day hold stop loss. Short side is the same thing in reverse. It goes short today at the close, gets out when the close takes out the previous day's low. And then 10-day hold, that's as it sounds. You buy it at the close today, or the computer does, sells it 10 market days later, and we look at the results. Well, not usually. This is not really something you force. This is seasoning to the entree. So we look for tendencies. That's why we look at market momentum, that number we're talking about. I said 283 to the long side or something around there. That's what we're looking for. Sometimes you'll see that like 430 out of 500 S&P stocks make money to the long side. The market's pretty strong then historically. So we don't force it. We look for things. Let me do 10-day hold real quick. 98 to 70, 228 to 60. So I would say this is a normal time, not very seasonal. The market historically goes up. This isn't an astronomical number to the long side. So not a lot to take from it today. Do I like CCL? Uh, I'm not a momentum trader. So in this sense, this is not something I would buy now. I don't like to join. I don't like to be the exit liquidity for everyone else that took this trade down here. So I wouldn't take it now. I would wait. But some people like that kind of trade. Yeah. Still not my kind of trade. All right. That's all I got. Here's the link for 1 o'clock with T Buzz and Roger. And I'll be hanging out around. I will see you all tomorrow. Actually, I won't. I'll see you all on Monday. No VIP room until then. All right. Bye, everyone.